We expect growth in Sub-Saharan Africa in 2022 to be 3.8% and recover, accelerate a little bit to 4% in 2023 and beyond.
In this program, the latest regional economic outlook for Sub-Saharan Africa.
I am Papanjai, head of the Regional Studies Division in the African Department of the International Monetary Fund.
So, as hard as it is to imagine, 2021 was, at one point anyway, actually showing some promise for Sub-Saharan Africa. What happened?
Indeed, Bruce. Sub-Saharan African economies were growing very strongly in 2021. We were expecting the region's average growth to come out at around 3.7% for 2021. It turned out to be 4.5%. And most of that positive surprise or that momentum started in the second half of the year. But what the war in Ukraine has done is to put a halt on that momentum. It led to a significant increase in commodity prices, more volatility in global financial markets. And it comes at a time when the policymakers in the region have little room for maneuver. So as a result, these type of growth that we are expecting are not enough to make up for the lost ground of the pandemic.
And so here we are with a long list of things that Africa has to contend with. Let's start with inflation. To what degree is this record high inflation that we're seeing today a risk to development?
Yes, inflation pressures have increased quite a lot. We are now seeing inflation in double digits for the region as a whole. Over, I think, 11.5% was in 2021. We are expecting it, if you look at the period average, to go towards 12.25 percentage point. And this is the first time since 2009 that we have this double-digit projection for inflation. And it reflects mainly higher food prices and higher energy prices. And as you can imagine, this will have a big impact on the most vulnerable in the region, increase poverty and potentially could raise social tensions. So for the policymakers in the region, like central bankers in particular, dealing with this inflationary pressure won't be easy because of the impact that the policies could have on growth. So the trade-offs between inflation and the recovery will be a bit tougher. So our recommendation here is to monitor the price developments carefully and stand ready to raise policy rates if inflation expectation drift up. Improving the policy frameworks could provide make this trade-off a bit easier to manage by just strengthening credibility of the central banks.
So commodities are also mixed up in all of this, with prices much higher than we've seen in many years. Do some countries actually stand to benefit from this?
Yeah, so, there's a lot of heterogeneity in the region, right? So in Sub-Saharan Africa, we are covering in about 45 countries, and 8 of those countries are oil exporters. You also have several countries that are export precious metals, for which the prices have increased markedly. So these countries will tend to benefit from the increase that we have seen in oil prices, for example, or metals. But for the majority of the countries in the region, the remaining 37 countries in the region, the increase in oil prices, energy prices, and food prices will put them in a very difficult position because it's a negative term of trade. In fact, it will also worsen their external balance and their fiscal position. And I must say that even the countries that will benefit from higher energy and metal prices may find themselves into difficulty because of the higher food prices that we have seen. And it will be very difficult for those countries to reach the most vulnerable, especially in the big urban cities. And another factor that may be at play is that if those countries have not reformed their subsidies mechanism, it might well be that the benefit that they get, on the one hand, from higher oil and energy prices could just turn up into higher subsidies.
And you mentioned food, of course, which is a huge issue, and with supply chain disruptions getting worse by the day, what will the shortages in fertilizer and wheat that has been, these imports have been affected by the war in Ukraine, what will that mean for agricultural production, which is so important to the region's economy?
So, Russia is one of the world's top producers of fertilizers and other key inputs for fertilizer production, such as natural gas and potassium. So, with fertilizer prices almost tripling over the past year, a prolonged war in Ukraine will just further constrain supply. And this, together with higher energy prices, would lead to increased cost of agricultural production, which would just, reduce countries' ability to produce more agricultural product. And, we will see it in more harvesting costs, higher transportation costs, and higher cost of processing food. And for the region, this will mean lower yields and in addition to this higher agricultural cost, which again, is likely to hurt the most vulnerable population, which could add then to social tension, particularly in countries in conflict or in fragile states.
And so agricultural productivity also suffers from the effects of climate change. Do you worry that the climate agenda will take a back seat to all the other challenges right now?
Well, the climate agenda is as important as ever. It should remain so. It continues to pose major challenges for Sub-Saharan Africa. You have seen the devastating effects of the floodings in Durban, in KwaZulu-Natal, in South Africa. And this is just yet one more manifestation of the multiple climate shocks that have been hitting the region. And it's very vulnerable to those weather-related shocks because it's large dependence on rain-fed agriculture.
Right.
So our recommendation, and we go a bit at length in regional economic outlook, is that to accelerate this the adaptation and make sure that as countries seize the opportunities offered by the green transition to make more progress in this area. There are some opportunities, of course, but this transition will be costly. And we have my colleagues at the IMF have done some work in it and evaluate the cost of between 30 and 50 billion in additional needs per year. Wow. So, there will be a need for international support. And there's also a need for making sure that this transition is just, in a sense that countries receive the help that they need to facilitate this transition and make sure that the affordability challenges for most of the vulnerable segments of the population are fully considered.
And speaking of money and the required funds to stay on track with their climate agenda, debt continues to be a problem. I mean, it was a problem going into the pandemic more than 2 years ago now, and it's only gotten worse. Where do we stand now in terms of debt sustainability?
Indeed. Debt vulnerabilities remain elevated in the region. There are 20 countries that are either at high risk of debt distress or in debt distress. and the debt service as a ratio to revenue has been increasing. So the debt burden is very heavy at a time when the social and development needs are very large. So for countries in the region, the space to deal with the impact of the war in Ukraine is very limited. And there will be a need to make difficult choices. First, for us, the priority is really for countries to help the most vulnerable population mainly through targeted transfers, if possible, especially those countries that have good social safety nets. Those that don't have those safety nets could resort to food subsidies and tax cuts, but these will definitely need to be contained both in scope and in time, given the limited fiscal space that countries have. And countries will need, of course, to try to create more room by improving domestic revenue mobilization and also making sure that they get the best bang for their bucks by increasing the efficiency of public spending.
So one of the things that I thought was very interesting was how you look at the long-lasting effects of school closures during the pandemic, which were, among the world's highest. How much or how might these school closures affect the ability for the region to bounce back from all these, these multiple crises?
Schools closed for about, on average, 128 days, and this was much more than we have seen in advanced economies, about 84 days between February 2020 and October 2021. These school closures, risk harming the human capital accumulation, the learning capabilities of the region, and undermine essentially lifetime productivity. There is, we had recently, by we, I mean the fund has put out a blog. My colleague Ruchir Agarwal has put out a blog recently discussing this particular issue. And the blog cites a report from the UN and the World Bank that essentially states that the pandemic era students could sacrifice a huge amount of in terms of lifetime earning. I think the estimate was as large as 17 trillion globally. So just to tell you the impact of this. So this is why it is very important for countries in the region to find resources to scale up investment in education, human capital. And this would need to be done to help and make sure that there are no scarring, we call scarring effects from the pandemic, and countries in the region to renew the progress that they're making toward the sustainable development goals.
Papa Njai, head of the Regional Studies Division at the IMF. Thank you.
Thank you, Bruce.
There's much more in this latest Regional Economic Outlook for Sub-Saharan Africa. Check it out at imf.org. Look for other IMF podcasts wherever you listen and follow us on Twitter at IMF_podcast. I'm Bruce Edwards. Thanks for listening.